Good morning, good morning, good morning, good morning. Good afternoon, good evening. Hope you guys are doing all right. Really excited to get going today. Lots to talk about. Please let me know in the chat if you guys have anything specific that you guys want to go over. I'm just going to go over some of the bigger things that have happened in the markets from a news perspective and talk a little bit about what's been going on in the markets as well. As I'm sure you guys know, most of you guys are currency traders. There's a lot of data that's been coming out over the past few days, and there's a lot of data that's going to be coming out in the future as well. I always like to open up talking and thinking about what's happening in the future, right? We have a lot of things going on from the perspective of monetary policy. We just got the M3 money supply, or we're beginning a couple things from the ECB. I believe the president, she speaks at 9:30 Eastern Standard Time. You gotta be careful. There's a lot that's going on. I would really encourage everyone here to be very cautious about the trades that they're making and very cautious about the plans that they're making moving forward. Just quick overview of the big indices, of course. S&P had a beautiful, strong day. To be expected, everything's starting to level out a little bit. We're starting to see a little bit better performance after seeing this shallow pullback. The fact of the matter is smart money is getting in, and it's getting in heavily in the indices. And we're obviously seeing that through this really beautiful daily engulfing candle. And that's not just true of the S&P. We're also seeing it on the SPOOs. We're seeing it on the Dow Jones. The VIX is seeing a little bit more in the way of volatility, which is, again, to be expected. It'll probably level out. There really isn't much to be said in terms of volatility over the next few days, at least in the American market, is what it is. The dollar has been gaining a tad bit of strength. This is more so a conversation to be had concerning everything that's going on in China. China is estimating that they'll have 5% GDP growth this year, which is aggressive to say the least. But whenever China's doing poorly, the U.S. is going to be doing well. We're interlocked like that. It's been that way for decades. Not really much we can do to get around it. Continuing on with the currency conversation, there's a lot of things that are going on with the euro dollar. There's a lot of things going on with all of the currency pairs, of course. We're sitting on our hands from a Forex perspective. As you guys can see here, yield rise of inflation data supports the ECB stance. The fact of the matter is, Lagarde, she's going to be speaking later today. Forgive me, I don't know how to pronounce her name. She's French, not Spanish. I don't know why I said that with the Spanish accent. But when the president of the ECB speaks, this market moves. She runs the euro dollar for a reason. She's been in the position for several years now. It's not likely that she'll slip up and she'll make a mistake when she's making her statements. So at 9:30, the words that we get are the words that we get from her, and then we'll be able to start readjusting our positions and talking about different opportunities that we can take advantage of. The pound dollar is in a different situation. The pound is struggling. We've talked about this a lot. We've talked about this issue a lot in terms of the way that they've dealt with inflation. It's been horrible. Let's be straightforward and honest about it. It's been horrible. They've had a collection of different prime ministers. There's a lot for them to do. There's a lot of work for them to accomplish. So I imagine the dollar will continually gain strength against the British pound. But of course, everybody has the opportunity to be wrong, and I am wrong quite often. So take everything I say with a grain of salt. The yen has been really struggling as of late, regardless of the Nikkei's performance. When you look at the Japanese economy, it's making sense. They've worked very hard in order to fight against deflation over the past few years, and now we're starting to see them struggle with inflation on the opposite side. There really isn't much room for growth in their economy. I shouldn't say that. There's room for growth in their economy. However, we simply haven't seen it. They're doing really poorly in terms of trying to replace their incredibly aging population, and they're still struggling heavily with the issues that they're facing concerning their Immigration. They need labor. They need labor really bad. It's a labor shortage over there. There's a labor shortage in the States too. There's a labor shortage everywhere. But in countries like Japan and countries like South Korea, where everything is so monochromatic, it's a lot more difficult to get something like immigration going. Because, quite frankly, it sucks to be an immigrant in Japan. You're surrounded by a bunch of people that don't necessarily want you there because they've been around the same kind of people all of their lives. In a sense, you can't blame them. But from an economic perspective, it's hurting the yen. Period. So you're going to see most yen pairs lean more towards the opposite side of the pair, in this case, the US dollar. Again, there's some room for us to go here. We've now closed over this swing high that we had way back when, November of 22. Considering that that's happened now, I'm very interested to see what happens if we get up to the 150 area. If we get to the 150 area. If not, then I'm looking for a pullback in this guy. This is one of the only currency pairs that I'm watching avidly. As always, got to check on Russell's position just because I think it's a lot of fun. This peso position is ridiculous. We're still waiting on some news to come out of Mexico. So there's not really too much to say here. As soon as some more news and data comes out, we can have a bit more of a conversation. But the peso's not performing well. The dollar's been doing damn good, even with the issues from the pause. It's been incredibly impressive. Looking at some of the biggest names, Apple's been going through something crazy. I don't know what it is. I don't know what to tell you about it. Obviously, as you guys can see, Apple stock set another record high, which is preposterous. I mean, it's crazy to think that Apple, during this time of inflationary pressures, recessionary pressures, pressures from, everything, man. Apple trees, orange vineyards. They have nothing on this company, Apple. That was a really bad joke. I apologize. But the stock is it's performing, and it's disrespectful, to be clear. I wanted to buy this thing. How in the world do you buy this thing when it's this overbought? I want to be in this trade, ladies and gentlemen. I want to be enjoying some of these profits. But what are you supposed to do? You have this thing that saw a low. Let me get rid of that there. It saw a low in March of this year. It skyrocketed. We're now in June, a month where very few stocks perform well. Not only has Apple performed well, it's outperformed damn near everything else on the market. Look at that. It's up 3% in a day. What am I supposed to do here? I'll tell you what I'm supposed to do. I'm supposed to sit on my hands and be patient, regardless of how hard that feels right now. The fact of the matter is, if you're buying at all-time highs, I don't know what to tell you outside of be careful. You have to really watch where you step and how you go about your trades, especially about this kind of thing with this beautiful, beautiful, beautiful uptrend. Because the reality of it is, you either watch your step with this kind of trade or you stub your toe. It's very, very easy and very realistic for this thing, now that it's cleared out stops above all-time highs. It's very realistic for it to fall, and to fall aggressively. Because the reality of it is, this is a run that we've seen for several months, weeks on end. You have to be incredibly cautious when you're getting involved with these kinds of trades. If you're interested in trading this kind of equity for a long period, you have to be incredibly careful. Day trading, you can pull off, but it's tough. Looking at other movers, Nvidia is doing interesting. There was some news recently out of China. Well, not out of China. It's just out of the U.S. There's some concern about semiconductors working with China. I don't know if you guys don't know this, but we don't like China in the U.S. Go figure, right? So there's a concern right now for U.S.-based semiconductors to be doing business with Chinese suppliers in any capacity. There's a collection of politicians that are chirping, saying that they want to bar companies like Nvidia from even working on in China for this reason or that politically. Surprisingly, of course, Nvidia is still performing well, but we'll see what happens when the market opens, because this information just came out not too long ago. It's without question going to hurt Nvidia's business in some way, shape, or form if a law is actually brought into play that limits what Nvidia can do in terms of its supplier base. Whereas, where else is it supposed to get its supplies? What you're going to buy tech stuff from Thailand all of a sudden? It's not a good situation. Trying to create an entirely new supply chain is easy for no one involved. So still staying in line with those semiconductors and those producers of these kinds of chips, Intel's been having a tough time. Of course, it's been having a tough time. It's a realistic stock. There's no real hype behind it like there is with Nvidia. So it's taken this news a lot poorer in terms of any negative news regarding these wonderful AI stocks. We're starting to see a much more realistic pullback on this thing. I'm not super interested in it, but it definitely is something that would make sense if anyone wanted to jump in there. I couldn't blame you. Microsoft, same exact situation. Ladies and gentlemen, I want to be a part of this. I need to be a part of this thing. This thing has been running up like it's like it's running away from something. Is this a scary movie? Is it being chased by Michael Myers or something? I don't know. All I know for sure is Microsoft created this incredible gap back in April, and we haven't even begun to see this gap closed. I don't know if we will see this gap closed. We might never see it. You know, the markets do what the markets want to do. The reality of it is we are starting to see a bit of a pullback in the market. Obviously, there was some data that came out. Not data, there was some news that came out a few weeks back where, unfortunately, Microsoft struggled with some security issues. Microsoft Teams and Microsoft Outlook went down, causing a collection of different issues to occur, and it left the stock underperforming. That, I believe, was this Friday the 16th. So close. Friday the 15th would have been cool. But obviously, we've been on a bit of a downtrend since that point. I wouldn't be surprised if this guy popped from here or if this guy continued going lower. From a supply perspective, I'm not really seeing much of an opportunity. I would love to see a deeper pullback in Microsoft. Tesla. Guys, if you're interested in any electronic vehicle that is not a Tesla, God help you. Tesla is impervious. It is an undefeated. It is the car manufacturer. I hate to say it. The data suggests what the data suggests. Real quick, David, what time frame are you usually executing on? I'm usually executing on the 1 minute or 5 minute trade framed on the 30. David, that's a great question. Dave, I really go over a lot of macro stuff, but I'm always willing to answer some trading questions. I trade volume bars. I don't subscribe to the whole minute bar thing. Don't ask me how I started this, but a few years ago, I picked up tick charts and then volume charts. I really like taking a look at how many contracts are trading at a given point as opposed to waiting for time to tell me where buyers and sellers are. So I guess the equivalent of what I trade, depending upon the product that I trade, I mostly trade futures, which is a tad bit different than Forex. I'm not sure what you trade. But on the futures market, it depends on the product that I'm trading. On the S&P 500, I'm trading on like a 1,000 contract bar, partially because it's summer, a 5,000 contract bar, and then I have for a longer term idea of the market, something closer to like a 75,000 contract bar. And the reason why I do this, again, is just because I want to see where contracts are trading as they're trading. That way I'm reacting to people as opposed to a clock. It works for me. It doesn't work for everybody. So absolutely great question. I hope that helped, David. If you have any other questions, please feel free to jump in. I always love talking about that sort of thing. Tesla, that's where we're at. Tesla runs the world, ladies and gentlemen. I don't know if you guys know. Elon Musk is about to have a professional fight with Mark Zuckerberg. It sounds like a joke. It sounds like these guys are ridiculous and they're idiots, but they're not. They're brilliant. And Elon has displayed that in a collection of different capacities, as you're seeing with Tesla. The reality of it is Volvo just did a deal with them in order to use their new chargers.
not new chargers, but in order to use their superchargers and use their chargers in general, because Tesla's the only company with the infrastructure to pull this thing off. So when you're a company that not only can offer a consumer product, but you can offer a B2B product, a business to business product, all you're doing is you're further insulating your position as a strong competitor within the space. If you've paid any attention to the AV space, Lordstown, a little known electric truck producer right here in Ohio, where I'm living currently, they recently filed for bankruptcy. They basically had no money, they basically had no vision, they basically had no marketing. I heard about them because I trade, no other reason. If I asked my wife about Lordstown, she would probably ask me what band that is. You know what I mean? So it's incredible what Tesla has done. I'm still not a part of it. I still think that is overbought. But the reality of it is they're ruling the world right now. It's incredible. It really is incredible what's going on. Netflix, there's nothing really crazy going on with Netflix. I'll just skip over that real quick. Right back to oil. Ladies and gentlemen, this is a real opportunity. I'm talking to anyone that's interested in trading commodities, anyone that's interested in learning about commodities. We're getting a market that continually ranges up and down. Now, we are starting to see some things that are concerning. We have the tick data. Real quick, I'm going to answer David's question. Forgive me. Tick data. I used to try to trade from a price ladder. I like charts because I think time away from a price indicates in this institutional sponsorship. That's a great observation, David. So trading from a price ladder and tick charts aren't necessarily the same thing. I want to make sure I'm completely understanding what you're saying. But, trading on the DOM by itself with the price ladder is very difficult. I don't blame you for stepping away from that. As for institutional sponsorship, you have to remember that institutions use a collection of different types of charts. I've had the pleasure of meeting a lot of different kinds of traders, whether they be private equity traders, investors, guys that hedge. The other day I met somebody that speculated for Procter & Gamble on a $20 million account back in the 80s. Everyone uses what they like. So the most important thing isn't necessarily trying to find where an institution might be sponsoring a price, because the reality of it is we don't really know what they're using. I just recently interviewed another trader who invented TrendSpider, and that's a device that allows you to effectively automate all of your trades. They're starting to integrate AI into their systems to create their trading opportunities. So we always have to remember, you just got to stick with what works with you, my friend. If the 1 minute, the 5 minute, 30 minute, if those charts are making you money, good for you, man. Keep doing that. I'm always very, very open to change, and I would always suggest that for any trader. I think it's our job to maintain weak opinions and let go of our strategies if over a given period of time it shows to no longer be profitable, perhaps because the market's changed, perhaps because the strategy isn't being executed properly, or perhaps because you've changed in some way, shape, or form. So, David, I really appreciate your participation, my friend. Please let me know if there's anything else I can answer. I love this stuff, and if you let me, I'll babble all day about it. But moving on. Oil's crazy. Oil's crazy, ladies and gentlemen. So we've seen this guy repeatedly range back and forth. There has to be some kind of catalyst that gets us out of this area. It could be something as simple as a ton of volume at a given point. It could be something as simple as OPEC making a new announcement unexpectedly. But the reality of it is, this market does not want to leave this area below 66.85. Obviously, it gets below there, it immediately pops. This demand zone is incredibly important, and we really don't like seeing anything above the 74.15. Obviously, the supply zone is incredibly important. So as you're looking for opportunities, and if you're looking at any product, it's not just crude oil. If you're looking at any opportunity that's in a ranging market like this market's been this way since, we started this range back in the last day of May. It really started towards the beginning of May. If you're ever in a market like this, please remember to keep those stops tight, keep those targets tight. The reality of it is you never know when this thing is going to turn around, and you really want to make sure, if you want those larger targets, you're trading at the extremes. You're buying towards the bottoms here, you're selling towards the top. It's a really great learning experience. David, as a macro guy, how do you deal with sitting on your hands and waiting for levels of business or times of business? David, that's a great question. I'll be super honest and straightforward with you. You always have to play to your strengths in trading. I'm really blessed to be a naturally patient person. And so, do I get antsy sometimes? Absolutely. I have an energy drink right here, right now. That caffeine is surging through my blood, and it's making me a little jittery. But when it comes to trading, I do everything in my power to wait for the best possible opportunity. So the reality of it is, I don't look at charts unless I have an alert shoot over to me. In the mornings, I'll take a look at a chart. If something is interesting, and I think that there's an area of support, an area of resistance that I'm very interested in, there's a catalyst moving something along, then I'll watch. But outside of that, I don't look at the charts, man. I've learned I haven't been trading too long. I've only been trading 6 years. But I've learned in the 6 years of trading that I've done that if I stare at charts too long, I'll want to participate. So, in order to make sure I don't, I look over things in the morning. If there's something interesting, great. If there's something that's not interesting, I don't force anything anymore, especially during the summer months when you have so many large traders, so many large institutional traders, not at their desk, but in the Maldives somewhere. I hope that answers your question, my friend. But my suggestion is always just to be as patient as you can be. And if you can, just set an alert, man. You don't have to pay for it. You use investing.com's app. Set an alert for a certain price point to be crossed or hit, or a particular MACD cross or E2 EMAs crossing, whatever your trigger is for a trade. I would go ahead and I would try to program that into the app and step away, man. Don't get too involved. Don't let yourself get antsy. Produce the best possible trades you can by ironically not looking at the charts until it's time to jump into the charts. Hope that helps, man. But yeah, the idea with these ranging markets is always just to be, as we were just talking about with David, you got to be really patient in these kinds of markets. The last time I traded crude oil, I was over here. It was towards the beginning of the month. You guys know I really only trade 3 assets. I trade the ES, I trade the NASDAQ, and I trade oil, the S&P 500, NASDAQ, and oil. And the fact that I was able to buy this here is great. I didn't hold it to up here, so don't even. I wish I did, but I got shaken out a little bit intraday. But the reality of it is there really wasn't much opportunity for me to get in anywhere else. I didn't like the fact that this guy closed with such aggression, just barely below the previous engulfing bar, so I didn't get in on this day. I couldn't find any reason why a short here would be a good idea, considering that most of the supply is up here. So I haven't sold it. I haven't purchased anything down here again because the volume isn't there. So when you're thinking about it from the perspective of how to be patient, make sure those rules are clear. Make sure those rules are tight, and make sure you have alerts to let you know when a condition has been met. Again, it doesn't mean you don't have to never look at a chart. Look, I love trading. I look at charts every day, regardless of if I'm trading or not. I look at assets that I have no business even looking at. But the reality of it is, you got to be patient. Stanley, hi Aaron. I like your discipline regarding patience and waiting for the best setups. I'm learning from that. I'm glad to hear that, my friend. Patience is really a virtue, and it's best way the best way to work on it is to try to utilize it. And remember, man, we're all human. I make mistakes from time to time. Like I said, hopping into a trade here on the 1st of June and not being patient enough to hold that to my target. That was a flaw that I have to deal with, I have to journal about, and I have to learn from. If you can, please journal these things out. Journal out these experiences, your thoughts, your processes. It's a great learning tool for yourself, and it's also something that you'll be able to look back on and be proud of, because you'll be able to reach a point of patience that allows you to consistently produce positive results from your trading. That doesn't always mean you make money on every trade, but that means you execute your plan to the best of your abilities every time you go out there. I'm really glad that helped you, Stanley. But yeah, so that's the oil market. Gold. Gold is in a hell of a downtrend. Let's be honest, guys. Why would you be in gold when Apple is at all-time highs? All the FOMO is in all these tech stocks up here. Guys like Microsoft, guys like Apple, they're sucking up buyers that were previously in things like gold. Because let's be clear here, gold hit this double top, and it's been falling ever since. You know, I guess it could be considered a triple top, but this is such a long time ago, back in August. But at August 2020. Stanley, thanks a lot. Thank you, brother. Please, if you have any questions, comments, concerns, always feel free to reach out in the chat. We're here to help, man. So if I can do anything to make you a better trader, I'll do it. If you need anything or ever want some additional help, please feel free to email me too. I feel like I could say that there are only there's only like 20 people in the live stream right now, but I'm always willing to lend a hand to aspiring traders. I think there's no reason why all of us cannot be enjoying these markets. There's an abundance of opportunity. There's an abundance of money out there. There's no reason why each and every one of us shouldn't have a piece of that pie. So yeah, gold. Obviously, we're getting a lot of buyers. A lot of the guys that were buying down here towards the beginning of the year are cutting their profits, and we're starting to see this thing finally fall off. Obviously, as well, we're waiting on Powell news too. So Jerome should be speaking, I believe, in Portugal. I have to double check when he's speaking. But look at that right there. He's speaking right at 9:30, right at the market open. So we have to be incredibly cautious of what he's doing, because of course whatever he says will inevitably move the markets. But please be cautious around 9:30 Eastern Standard Time. If you're in a trade now and you're swinging, who cares? That's fine. If you guys are in it, if you guys are day trading in some capacity, you know, that is not all right. That's not okay to be involved in some kind of trade when you guys are looking at this type of intense news. There's a reason why so many proprietary trading firms do not allow their traders to trade right when an economic event is happening, especially something as shaky as a speech from Jerome. Abby, please tell us your email. I don't have it posted somewhere. Usually I do. I will post it in the chat. Give me just a second here. Okay. So guys, it is already 5:30. I actually recently did a video for you guys on the situation with the Federal Reserve bank stress test. That's another video that we just made happen. So please feel free to take a look at that. That should be premiering right now as we speak. Before I go, is there anything that you guys would like to take a look at? Any other questions, whether that be on the markets that you're seeing now, anything concerning markets that you're interested in trading, any questions about your psychology,
I'll stick around for the next 60 seconds, and then we will go from there. So, what else is there here? These are really the biggest things, man. Just dollar performance and things of that nature. Abby, no problem. David, no problem, my friend. Let's see, we got this booze. NASDAQ. No problem, Joy. We could have talked about a couple of things in play. Stanley, no problem, my friend. All right. All right, guys, that's been 60 seconds. Thank you guys so much for all of your input. Thank you guys for participating this morning. I hope you were able to get something out of our discussion today. Please, please, please be cautious if you're trading in Eastern Standard Time. When Jerome talks, the market stops. So please be careful out there. I hope you have a magnificent rest of your day, whether that be morning, afternoon, evening. Either way, trade well and trade delicious.